Good evening, members. Good evening, Charity. Overview that we give people an additional 5 minutes to join. Charity, can you hear me?
Yes, I can hear you.
Yes, overview that we give people an additional 5 minutes to join in.
Okay. That's fine.
I think I'm tempted to start the members that we have. So far we have 35 people. And I urge members who have joined to remind friends that are not yet here that the webinars began. Good evening once again. Good evening, members. My name is CPA Najuko Claire, and I work at the Institute of Certified Public Accountants of Uganda. And I see it as a privilege to be the chairperson of this session this evening. This evening, we are blessed to have CPA Akatukwasa Charity Wizera. To me, I perceive her as an expert in tax matters. I'll just give a brief profile about CPA Charity. CPA Charity is a member of ICPAU and ICPA-K, that is the Institute of Certified Public Accountants of Kenya. She holds a postgraduate diploma in tax and revenue administration. She's a graduate teacher by profession, and she graduated in 1990 from the Makerere University. She worked as a secondary school teacher for 7 years. She worked with the Uganda Revenue Authority for another 7 years. She was a revenue officer, but also doubled as a trainer for the Poditra course at the URA. She worked in the private sector as a tax consultant at PricewaterhouseCoopers for 9 years, where she retired as the level of manager in June 2016. She's currently self-employed as a tax agent approved by the Uganda Revenue Authority and as a tax expert at her business. Her business is called Value Impact Management and Finance Consultants. Charity is married with 4 adult children, of which of the 4, the 2 are twins. So she's a Nalongo. She's also a grandmother of 4. Charity, we are indeed privileged to have you this evening. But before she starts, I'd like to remind members that we have a Q&A section where members can post their questions, their concerns, comments. So you post that in the Q&A, not in the chat. So at the end, towards her presentation, maybe in the last 30 minutes, she will be able to answer some or even most of those questions. So for now, allow me welcome CPA Charity. CPA Charity, you're most welcome to speak to us this evening.
Thank you, CPA Claire, for that flowery introduction. I'm very privileged to present again. I think I'm going to share my screen. Are you able to see the screen?
Not yet. Not yet.
You are not seeing my screen?
No.
Okay. Let me try and share again. Can we see it now?
Yes, I can see it.
Okay. So there we go. Since you can, and I hope you can hear me clearly, all of you.
Yes, we can.
Okay, so we proceed. So I've already been introduced. So I'm going to do my best to try and highlight the issues that regard paper 9.
Maybe
So
Charity,
yes, please.
I would advise you maybe to stop the video because it affects the quality
Okay.
Of the voice.
Okay, that's fine. I don't know where to remove it now.
It's an icon.
Oh, okay.
It has nothing to do with the presentation. It's an icon below your Zoom app.
Is the video on?
No.
Now?
That's okay.
Okay. So we start with the syllabus, and I'll just do a brief overview of what the syllabus of paper 9 covers. So the syllabus, the major part of the syllabus covers the taxation of business income for corporate bodies. And in the process of doing the business income, we cover the different capital allowances, capital gains, and employment income. You'll find that some things are shared with the taxation of individuals. Then there also taxation of property income, income tax for individuals in business, and also individuals in employment. We have taxation of partnerships. That is where people have decided to pool their resources together as partners and to do business. Then the syllabus goes ahead to cover taxation of value-added tax. Then there is a major part which talks about the administration of the taxes, where we cover the offenses, the penalties, objections, and appeals. These are covered under the Tax Procedure Code Act, and the penalties will cover all the taxes that we are going to look at in general. Then the syllabus also goes ahead to cover anti-avoidance rules, international taxation, then taxation of petroleum operations, generally a brief overview, general tax planning, how a person can use all these tax laws to plan the tax issues so that the business can run without being disadvantaged by all the taxes that the business has to pay. The syllabus also covers another bit of international taxation, which is on customs management and customs procedures. And then ethical issues in taxation are also a major factor. So what are the learning outcomes for this syllabus? The learning outcomes, by the time a person is done with a study of of the advanced taxation paper, a person should be able to compute different tax liabilities for both individuals and corporate bodies. Of course, this one is a build-up on what a person has covered under the lower tax, under the lower paper of paper 6. Then you should be able to discuss international tax issues. You should be able to provide tax planning advice. A person who is through this paper should be able to demonstrate an understanding of customs management and also to adopt best practices when dealing with clients. Learning outcomes continued. Person should be able to advise clients on the way to handle their taxation issues ethically, to adopt best practice when dealing with the public, and therefore the examination will test the ability to provide tax planning advice and correct interpretation of the law. That is the major difference between the paper 9 and the lower paper, paper 6. But of course, this syllabus assumes that a person has the knowledge of paper 6. And so you need to know what is included in paper 6. So the learning outcomes for paper 6 as the basic taxation paper, the person should be able to understand the objectives of taxation and the factors that determine the country's taxable capacity, should be able to understand different forms of taxation and tax administration in Uganda. By the end of that paper, a person should be able to compute tax liabilities for individuals and corporate bodies. At this level, this remains the basic, which is expected to be improved as the person is doing paper 9. So in paper 9, there will be more complex scenarios to enable a person compute tax liabilities for both individuals and corporate bodies. Should be able to explain the tax system as it applies to individuals and corporate bodies. This is the level where a person gets knowledge to enable them prepare and submit tax returns for individuals and corporate bodies. This knowledge may still be requested at a higher level. Then you should be able to show an understanding of tax assessments, show an understanding of the e-tax platform. Basically, be able to assist taxpayers to register for all types of taxes and to be able to file returns using the e-tax platform, because we no longer have any manual returns for filing. So the e-tax platform should be well understood by a student at this level. So what is the importance of tax and tax planning within the accounting profession in general? Why is it important that whenever a person is training to be an accountant, person should be able to appreciate tax? This is because every decision that a person makes in business will have a tax impact. So if an accountant does not appreciate tax, you are bound to make a decision that will cost the business at a later date. So that's the reason why tax is important within the main framework of accounting. And of course, tax itself is accounting, but this is accounting for tax considerations different from the financial considerations. So examples where tax considerations will have an impact on the decision to be made include investment decisions. Before a person makes an investment decision, they have to weigh all the options and know which option will minimize the tax incidence. So if a person doesn't know the different tax treatments of different things, then the investment decisions that are going to be made are likely to lead to the downfall of the company and the company's operations at one point. Then the company needs to know how you can save in order to maximize the results of the business that you are dealing in. So the different tax treatments will enable the person to know which tax you can pay in order to save and all that kind of business. In the purchase of assets, you need to know which assets will lead the business. Okay, which assets you will minimize the taxes, or which assets will make you maximize the deductions that the business can take, and all that. Then business financing decisions and employment decisions, because you need to know if you employ different types of different categories of staff, how can you save both on the tax, and then the staff are able to get maximum payouts. So tax is very important within the framework of accounting in general, and that's why it is within the framework. So what are the examiner's expectations? First of all, examiners expect candidates to follow instructions and interpret the requirements given for each particular question. The question will always list whatever a person needs to do, and at the end of each question, there is what is required. So the examiners expect that student candidates will read through the question and be able to interpret what is required in order to be able to answer what is required. Expected to provide detailed workings in line with the level of the paper, and then to provide answers in a clear format. In each examination, when candidates are given the answer scripts, the answer scripts will always have instructions on how you are supposed to answer. If the script says, please start each question on a fresh sheet, please follow the instruction and start a fresh question on a fresh sheet. If it says, please write the question you are answering at the top of the answer script, please do. Because most times, some of the answers may be lost within the other work if the instructions are not followed properly, and candidates may lose marks. So I had the privilege of reading through the examiner's observations, examiner's reports from December 2021 up to September 2022. I had the privilege of reading through all the examiner's observations. Time was not enough for me to go through all those observations, but I looked out for the main ones which can guide us. And I know as candidates, you have access to these examiners' observations on the portal. You can log in and read at them in detail, but I have picked out the main ones which normally lead candidates not to perform well in the questions. So in the December 2021 diet, examiners observed that candidates struggled to provide tax advice on a number of practical tax challenges that were embedded in a number of questions. And this portrayed a sign of poor preparation in their view, which greatly impacted the performance in those areas that demanded application of knowledge. So from the beginning, when I started my presentation, we observed that one of the learning outcomes of paper 9 is for candidates to be able to provide advice to their various clients after they have qualified as accountants. So advice will not be a standalone. You cannot have advice as a standalone question, and you cannot predict where you are supposed to advise. But practical tax challenges will be presented within the question, and then the candidate will be expected to pick out where the advice is required and to provide it. Much as candidates are usually able to compute and give the figures, examiners observed that where advice is required, it was normally not given, which led to candidates getting minimum marks or missing out marks that they could have got. Still in the December 2021 diet, there was a large number of candidates who did not attempt the required number of questions. Question 1 is a compulsory question carrying 40 marks. So for starters, if a candidate does not attempt question 1, which is carrying 40 marks, it becomes problematic to get the 50 marks that is required to pass the paper from the remaining questions, the remaining 3 questions. Even then, in an examination setting, so many things happen in an examination setting, and it is difficult for a candidate to score all the marks, like 40 marks out of the 40. It's possible if a candidate is very well prepared, but in an examination setting, it's very difficult to get full marks in a question. That's why candidates must make sure that they attempt the required number of questions to maximize the marks that they are going to get. December 2021 diet still, most candidates, and I think that was the reason why most candidates did not do the required number of questions. Most candidates shied away from the question regarding petroleum taxation, and those who attempted it performed poorly. So it's highly probable that many of the candidates had not invested their time in studying this particular area. But we all know that the petroleum sector is going to be of vital relevance to our economy. It continues to be of vital relevance to our economy. Now that we expect that the drilling is going to start very soon. So candidates should interest themselves in this part of the syllabus, because you may reach the exam and it may be the only question that you would have attempted if you had interested yourself in this part of the syllabus. Still in December 2021 diet, most candidates struggled with transactions involving cross-border entities, especially that in that diet, they were required to use the application of treaty provisions, and these transactions are common features of many taxpayers. So candidates should interest themselves in reading international tax. We leave the 2021 diet and December, and we look at March 2022 diet. In March, examiners observed that there had been improvement to performance of candidates. In that diet, majority of candidates were able to attempt all the questions as required of them, and as a result, the performance in that diet greatly improved. So examiners attributed it to the fact that probably candidates were more prepared for the exams. However, that diet still had a question on oil and gas, which candidates did not attempt, as well as the taxation of partnership income. The answers provided for partnership income in that diet demonstrated that candidates are probably not well versed with the taxation of partnership income. Most of the professional businesses in the country are arranged as partnerships. Legal businesses are partnerships. Accounting and auditing are partnerships. You have engineers, they are partnerships. So this is a relevant area. Doctors, this is a relevant area for any practicing accountant or tax practitioner. So this is an area where candidates should concentrate and know what is required in the taxation of partnership income. There was a marked improvement in the basic VAT principles during that diet. Unlike prior diets where the VAT numbers would not be attempted by candidates, the VAT emerged as one of the best performed questions in this diet. Majority of the candidates who attempted this number scored above the pass mark, which is an indication to the examiners that probably candidates and maybe even tuition providers are beginning to pay a lot of attention in covering VAT compared to prior periods when candidates would avoid attempting the question on VAT, making candidates attempt fewer numbers, or those who would attempt would get very few marks, leading them to scoring less than the pass mark, the final analysis. VAT continues to be a major part of the tax system in Uganda. So it is a part where any qualifying person should be versed with the treatment of different supplies in the VAT law. However, a few candidates still had, much as the performance had improved in this diet, a few candidates still had challenges in categorizing items as either exempt, zero rated, and this affected their apportionment computation. There was generally an improvement in VAT performance as opposed to previous period where candidates avoided VAT numbers. We now move to the June 2022 diet. Here, the examiners observed that candidates continue to perform poorly in the customs area. And this is likely to be caused by the reluctance to study and appreciate the customs regulations. When you move to the September 22 diet, what had improved in March 2022 surfaced again in September 2022. Failure to balance the performance in each individual questions. Many candidates scored good marks in the compulsory question, but were let down by poor scores in the optional numbers. So it is important to understand that much as you know everything about a certain question, balance your time so that you don't take too much time on a question, especially if you spend too much time on the compulsory question. You may end up repeating yourself and writing information which will not necessarily earn you extra marks, and yet you could have attempted another question and obtained marks in that question. So it is important that the questions, the performance in the questions is balanced. I will now tackle the issues that usually bring problems in the questions. Without moving diet by diet, I tried to pick, they tend to appear in each setting. So I'm going to look at them in general terms without necessarily tagging them to which setting. Where necessary, I will point out which diet that problem surfaced, but now I'm going to tackle them in general terms. When your candidates are answering corporate and individual tax computations, examiners observe that candidates generally had challenges with the identification of tax deductible and non-deductible items. Usually the question, whether it is on corporate tax or on individual tax, the question will present a scenario. And that scenario will give you the accounting results of the person. They will generally give you the comprehensive income, comprehensive profit and loss income of the person, which will give you the accounting results of the person's business, which usually ends with a profit before tax. A few candidates are not able to recognize that whenever you are computing any tax computation, the starting point is the accounting profits before tax. Some start with the accounting profit after tax, if it is given in the question, which is very wrong. Because, and then after getting the accounting results before tax, this result is adjusted in order to arrive at the chargeable income. The Income Tax Act gives us the items that are deductible and the items that are not deductible. Starting from section 22, you get the items that are deductible and the items that are not deductible. So items that are not deductible will normally be hidden within the notes that are given. And then from there, one is supposed to identify those items and add them back in the computation. So most candidates were unable to identify the items from which initial allowance is applicable in line with the requirements of Section 27A of the Income Tax Act. Please read all the sections. After reading section 22, then there are other sections which give you the items that are allowable. Section 27, 28, 29, 30. You have your income tax acts, you should revise. A person attempting income tax, the act is like a Bible. You have to read it and understand what it means. Then a number of candidates portrayed a lack of appreciation of the provisions of section 29, specifically subsection 4, which provides the basis for the computation of industrial building allowance in lieu of extension and new building capital expenditures. Sometimes a new building is not put up, but substantial capital expenditure has been spent to improve a building. So the tax law states that such expenditure should be treated as a separate building. But these candidates are not able to get this concept so that industrial building allowance is calculated in the proper way, leading to wrong answers. Candidates were unable to advise, like I said in the beginning, where a question requires candidates to advise. I think it was the sitting of December 2021. Candidates were unable to advise the client on the tax treatment of losses where a change in ownership is involved. Candidates unable to classify the asset additions and disposals under appropriate classes. You find that people know the capital allowances. Candidates know the capital allowances, and they know that there is a capital allowances schedule. But when it comes to posting them, they are posted under wrong classes. So you need to revise and understand the different classes that are provided for classification of capital allowances. In the questions which bring out the farming, candidates also failed to account for the tax treatment of farm expenditure as provided for by the Income Tax Act. And then you find candidates could not distinguish between the provisions of the law exempting the taxation of income derived from agro-processing and other income tax exemption enshrined in the Income Tax Act. This section has long been repealed. This was in the exam of December 2021. The section has now been repealed, but there are still exemptions that will affect agro-processing industries, and candidates need to read the exemptions provisions in order to understand where they apply and how they can be applied in an exam situation when one is given a scenario. Majority of candidates still find challenges with the amendments related to the computation of initial allowance with specific regard to the boundaries applicable. For a very long time, our income tax law had two rates for initial allowance. There was a rate of 75% for those areas which were outside Kampala, Jinja, Entebbe, Namanve, and then, sorry, Namanve was included with Kampala. Those within Kampala and Namanve, they had a rate of 50%. Those rates were repealed. Initial allowance was repealed for a year. So when initial allowance was reenacted into the law, the rate remained 1 or 50%, but for areas which are outside the boundaries of Kampala. So examiners noted that there are still candidates who are using the 75% rate, and yet it is no longer applicable. So candidates need to update themselves with amendments that affect the tax laws as they prepare to sit examinations. The majority of candidates had challenges with the treatment of minor capital expenditures and disposals in accordance with Section 26(2) of the Income Tax Act. According to that section, assets which are below 1 million shillings can be allowed in full 100% in the year in which they are acquired, rather than placing them in any class. The examiner will usually give hints where they expect that the candidates are supposed to identify the minor capital assets and to allow them as a deduction for capital allowances in full in the year in which they are acquired. But most candidates, the moment they see that it is an asset that has been acquired, then automatically they are taken to the capital allowances schedule. Yet it is to the advantage of the taxpayer that minor capital assets are deducted in the first year, because the interest is to pay less tax. So if you allow an item at 100%, then you will pay less tax in the first year. So in the September 2022, there were changes made to the tax laws. September 2022 had questions for the year ended June 2022, meaning that changes that were made to the Act commencing July 1st, 2021, were now in effect. Those changes were to the effect that the assets are now classified under 3 classes and not 4. But examiners observed that much as the question was mentioning that the year end is June 2022, candidates did not take this change into consideration. And another change is that once the assets are located up country, outside the boundaries, outside the 50-kilometer boundary around Kampala, and the assets qualify for initial allowance. That means that if those assets are added in the year, the initial allowance is the only thing that is going to be deducted that year. The remaining amount, the other 50% that is supposed to get the capital allowances, the depreciation allowances in the different classes, will be deferred to the next year. So majority of candidates had not gotten this concept of deferring of the capital allowances for assets that have enjoyed initial allowances in the year. And this is a change from how we are used to treating the capital allowances. The asset would enjoy both initial allowance, and during the same year, we take the balance to the respective class, and it would enjoy either the 40%, the 20%, the 30%, but that has changed. And now, the moment you have an asset that has gotten initial allowance, then it cannot get depreciation allowance in the same year. So this came out, candidates had not yet internalized this change. So candidates are always encouraged to update themselves with recent changes in the tax laws before sitting for the examinations. I have not talked about exempt income. I concentrated on expenses allowed and expenses not allowed, but we also have incomes that are not taxable. But you may find that in computing the business profits, those incomes have been included. So those incomes have to be removed before a candidate arrives at the chargeable income. So you should take note of incomes that are not taxable, as well as looking at expenses that are not allowable for tax purposes in adjusting for the chargeable income. Generally, what applies, there are some specifics which relate to individuals alone, but generally what applies as not allowable for tax purposes for corporations still applies for individuals if you have a person paying the tax as an individual. Now we go to partnership. The candidates who attempted this question were not able to provide the correct tax treatment of partnership income and the income earned by the individual partners in accordance with the Income Tax Act. And candidates were unable to appreciate the basic principles governing taxation of partnership income. What are these principles that govern the determination of partnership income? First of all, a partnership is not a tax-paying entity. A partnership may be constituted by deed or orally, but a partnership does not pay tax as a partnership. It is the individuals who constitute the partnership that pay the taxes. But there are specific rules on how you determine the partnership income and how it is distributed to the different partners. And all of these ones are laid out within the Income Tax Act. It's only that candidates need to read those provisions and be able to know how the income of a partnership, the chargeable income of a partnership is determined and how it is distributed between the different partners for them to pay tax. Of course, the partners may have other sources of income. So the only information that the partner may need is the share from the partnership to add it to his other incomes, and then he's taxed as an individual. Candidates were not able to separate the income and allowable deductions relating to rental income. And even some could not compute rental income and partners' income separately. Section 5 of the Income Tax Act separates the income from business and the income from rental. Rental income is taxed separately from business income. This is so even with a partnership. If a partnership owns rental property, the rental income of the rental property will be determined separately. And after it is determined separately, it is shared between the partners, and each partner pays the rental income, the rental tax on his share of the rental income. This concept, many candidates did not pick it out, so they left the rental income within the other income of the partnership. And in other cases, they also deducted the expenses for the rental income, but we know how individuals are taxed for rental purposes. Previously, they were allowed 20%. Then the amendment of 2021 to 2022, they were allowed 75% of the expenses, which has now changed. They are not allowed any expense, but they pay the tax at 12%. So once the income is distributed, each partner will pay the rental income as an individual. The question was in the March 2022 diet. Some candidates who managed to isolate the rental income, they taxed the rental income using the amendment that had come in from the year 2021 to 2022, but the question was for an earlier period. So candidates are advised to always take into consideration the tax period mentioned in the question. As I will emphasize even at the end of this presentation, income tax, especially income tax, is a historical tax. You first work, you earn your income. After 12 months, you compute your results. And after computing your results, the law even gives you 6 months within which to file your return. So you are filing when your year of income has ended. So you cannot use the rates which are applicable after the year has ended. You have to use the rates that were applicable during the year when you were trading. That is something, especially for income tax. We have a 6 months, what do I call it? We have a rule that we shall, things which are not yet 6 months after amendment are not examinable. But then you have to keep at the back of your mind that income tax is historical. We tax a year when the year has ended. You may pay provisional tax, that is advance tax upfront, but then generally your year has to end. You determine whether you made a profit or loss, then you compute how much tax you are going to pay. So if I'm going to be computing tax for the year ended June 2022. There is no way the rates for the year 2022 to 2023 will apply in that year in the question. The other area of income tax, actually it is individual income tax, but for people who are in employment. Many of us may be employed and tax is always deducted from you as pay as you earn. This is individual tax, but being deducted from people who are actively earning their income through employment. There are exemptions that are provided for under Section 19 when expatriates are being recruited. If you are paid any money as an expatriate to relocate you from wherever you were to come and work in the country, that money that the company has paid the person does not form part of the employment income and therefore should not be taxed. But most candidates include the reimbursement of relocation costs as part of taxable employment. This allowance may be given in several ways. Yeah, you may transport yourself and come into the country and pay and then provide the air tickets, and you are reimbursed for that money. So when the company is paying you, much as it looks like it is a salary, that money is not taxable. So the reimbursement for relocation costs include even where somebody is relocating his family, if he has to come and stay with his family in the country. It also includes if the company is to pay for you for a few days as you settle down. It is also included in relocation costs, and those amounts do not form part of employment income. Then we all know that pay as you earn is a monthly tax. So the question may be giving the person, may be given in a way of giving the monthly emoluments. But then at the end, when you look at the required, the question requires you to compute tax for a year. Candidates have a tendency of applying annual tax rates in computation of motor vehicle benefit and tax liability, where the question requires computation for a month. The question may require you to do the pay as you earn for 1 month, or it may require you to do the tax that the person is going to pay in a year. The formula given in the Act for computing motor vehicle benefit is an annual formula. So if the question is asking you to do tax liability for 1 month, then it should be apportioned appropriately. But the mistake candidates do, they are on the right track. They compute the motor vehicle benefit, but then do not apportion for the 1 month that is required, and therefore end up getting the wrong chargeable income, and then marks are lost at some point. The other common mistake on employment income is where candidates are unable to identify the circumstances under which an individual taxpayer is considered to be a resident or non-resident under the provisions of the Income Tax Act. In most cases, when expatriates are being recruited into the country, of course, they are not citizens of Uganda. So some candidates take it that if a person is from the UK or from India or from Kenya and is working in Uganda, he's non-resident. But residence is prescribed in the Income Tax Act. How long a person has stayed in the country, irrespective of whether he's a citizen or not, may make him a tax resident. So if a person is going to come and work in Uganda for 3 years, and you are computing tax for the first month when he has come into the country, it's prudent for you to treat this person as a resident rather than a non-resident, despite the fact that he has lived in the country for only 1 month. Because we know from the beginning that he's going to go over the 183 days in 1 year that are prescribed in the law, because he's working full time. So you treat him as a resident right from the word go. Employment income still in the June diet. Almost all candidates were unable to compute the motor vehicle and housing benefits. And those who attempted to compute the depreciation charge depreciated the motor vehicle for only 1 year instead of the 2 years as per the requirements of the question. So it requires candidates to be vigilant when they are reading through the questions and to understand what they are required to do. Candidates are advised to appreciate the computation of different forms of employment benefits in kind. Please revise the 5th schedule of the Income Tax Act and know all the types of benefits that a person can get in employment, which constitutes employment income for tax purposes. They just get benefits, not money, but when pay as one is being computed, they are included. I think those are the major. Like I told you at the beginning, I did not go diet by diet, but took the major things which seem to make candidates score low marks. When we jump now to value-added tax, deemed VAT is a problem. Candidates do not comprehend the concept of deemed VAT. Some were able to indicate the existence of deemed VAT, but still computed the VAT that is due. Yes, VAT is there, but it is deemed. So when you are computing the total VAT payable or claimable, this VAT should not be included. Actually, when filling in the VAT return, this deemed VAT has separate schedules where it is put, but it will be indicated on the main sheet as deemed VAT, but will not be included in the totals that are adding up to determine what is supposed to be paid and what is not, what is claimable and what is payable. Then the classification of supplies continues to be a challenge for some students, especially where exempt and zero-rated supplies are used interchangeably. Please note that zero-rated and exempt supplies are two different things. A zero-rated supply is taxable, while an exempt supply, of course, is not taxable, it is exempt. A zero-rated supply is taxable at the rate of 0. So when one is computing taxable supplies, zero-rated supplies are included in there. However, examiners noted that candidates are in the tendency of putting like dash against a supply without indicating whether it is exempt or whether it is zero. In totality, both of them have no VAT value attached, but one of them is taxable and the other one is not. So when a candidate puts a dash, the examiners get confused. They don't know whether it is exempt or whether it is zero rated. Without any comment against it, the candidate is going to lose those marks. Then we all know that now we have the principle of withholding VAT for the people who are designated to withhold VAT. So if the question indicates that the taxpayer is a designated withholding agent, when he's paying for his supplies, he has to withhold the VAT, unless his supplier was exempted from this withholding. So the concept of withholding VAT has not yet held ground among the candidates, but it is a concept that is being applied out there in the field. So candidates need to know that this concept is likely to be one of the areas that will be examined because it is there out in the field. URA is even penalizing people for not withholding. So this is an area that candidates need to know about. Still on VAT, candidates could not explain the consequences of violating the application of the FRIS receipting regime as enshrined in Section 73 of the Tax Procedures Code Act. Tax laws continue to evolve on an annual basis, and candidates ought to be alert on these changes to be able to provide updated solutions to tax challenges as they may arise. Even now, as we talk, URA is actively penalizing people who are not issuing FRIS invoices. So candidates need to know the penalties that apply to the different violations of the tax laws. Section 28(5). Most candidates still do not appreciate input tax that is not creditable, according to Section 28(5). In other words, what we normally call the blocked input VAT. Some candidates still do not appreciate the concept of input VAT, apportionment, and when it should be applied per the requirements of Section 28(8) and 9, as well as the fourth schedule. Especially where if a question has exempt items, you have exempt sales and you have taxable sales. The question will most likely require the candidate to test whether all the input VAT should be claimed or whether it should be apportioned, because if all your supplies are exempt, you are not entitled to any input claim. So you have to test the apportionment to see whether all the input VAT is claimable, whether none of the input VAT is claimable, or whether only a proportion can be claimable. So most candidates, even when the question is very clear that you should test whether there should be apportionment, most candidates do not try this concept at all. I think for VAT, before I do capital gains, I can make a summary that for VAT, you need to know what is in the second schedule to the VAT Act. You need to know what is in the third schedule. The second schedule lists all the items that are exempt from VAT, and the third schedule lists all the items that are zero rated. If you know those, and please know those who know them, according to the amendment, the most recent amendment, I have emphasized that for income tax, it is historical. So the exam is most likely to be based on the amendments for 2021, 2022. But VAT, the tax period is a month. We have a grace period of 6 months since the last amendment. The last amendment for VAT was 1st July 2022 to 2023. For anyone who is going to sit exams in December, the grace period is not yet over. So it provides that please know what was in the amendment for the year 2021, 2022. Capital gains. Most of the candidates struggled to explain what constitutes the cost base of an asset. And section 52 provides an extensive definition of what constitutes the cost of a business asset, and students are encouraged to familiarize with that provision. Uganda's capital gains regime is fairly narrow, and it is within those sections. Most candidates were able to compute the cost base of assets, but had challenges with the indexation of the cost amount. A good number of candidates were interchanging the two variables in the formula, thus failing to achieve the desired solution. For a long time, taxpayers were disadvantaged by inflation when determining the capital gain made on the sale of fixed assets. Because the law was only providing for indexation for assets that taxpayers had at the commencement of the Income Tax Act. But in the year 2020 to 2021, an amendment was provided to provide for consumer price index adjustment to the cost base for any asset that may have been held for more than 12 months. So candidates are not yet conversant with this provision, and even those who are, they have not internalized what the variables in that formula stand for. That's why they are interchanged and they give wrong answers. I cannot say more on oil and gas questions. I had already mentioned in the introduction that this is an important area going forward. We expect it to be an important part of our economy. And probably we are going to get more and more people involved in the oil and gas sector, either as contractors who are actively drilling for the oil or service providers within that sector. So this is a sector that we should familiarize ourselves with. So in the past questions between, I think, December 2021, the majority of candidates could not ably demonstrate an understanding of the farm out concept in relation to oil and gas transactions, and they could not advise on the penalties and offenses relating to taxation of petroleum establishments as per the law. Then candidates were unable to provide the withholding tax rules as per the Income Tax Act. And then majority of candidates could not explain the provisions of the Income Tax Act relating to the tax treatment of petroleum exploration and development expenditure. Granted, the petroleum and gas, oil and gas sector is developing, and as a result, even the laws are evolving every other day. And probably it may be understandable if candidates do not attempt them, and even examiners are cognizant of the fact that this is a developing area. But please expect questions to be coming from that area, because it is going to be an important part of our economy. Then when we go to international taxation, most candidates were unable to identify challenges posed by cross-border group transactions and probable reaction by URA, thus failing to advise management regarding tax avoidance schemes. International taxation, a major part of this international taxation relates with transfer pricing. It relates to identifying non-resident and resident incomes raised from sources of income from Uganda and sources of income from outside Uganda, and how they are treated. But majority of the students failed to compute adjusted chargeable income and tax liability resulting from recharacterization of incomes. We know the Uganda Revenue Authority, the moment a transaction does not make sense, then the law allows URA to recharacterize it to a form that makes sense so that the taxpayer is able to pay the right tax that is supposed to be paid. So you need to understand the source rules. When does a person derive income from Uganda? And when does a person derive income from outside Uganda? When income is derived from outside Uganda, how is it taxed in Uganda? Is it taxed or it is not taxed? You need to know something about double taxation treaties, which country is entitled to the money and which country is not entitled. Then you need to know transfer pricing regulations. You need to at least to read through them and understand what they are about. Most of the questions in this area may actually be theoretical because the practical scenarios may not be that much. Then there was a question which was talking about advanced pricing agreements. And when do you enter into advanced pricing agreements with the URA? But candidates could not identify the considerations for one entering into a transfer pricing agreement with the commissioner. But these considerations are within the transfer pricing regulations. So candidates need to revise the transfer pricing regulations if you are to have a balanced approach to the paper. You ignore some sections of the syllabus at your own peril. Then there is where candidates fail to distinguish between a branch and subsidiary in line with the Income Tax Act. This was in the September diet. A branch is a foreign company. It's just that it doesn't have to register fresh. And a subsidiary is a local company. But candidates could not tell the difference, and some were mixing them up. Most candidates failed to identify what qualifies for tax deduction when taxing branch income and the tax payable on repatriated income per the Income Tax Act. Another area that is common in this examination is on customs. The candidates continue to perform poorly in the customs area, and this is likely to be caused by not studying the customs regulations. Most candidates are unable to identify costs that are included in the computation of customs value. So candidates are encouraged to familiarize themselves with the valuation rules as stipulated under the customs regulations. There was a question that was set which required incentives to investors in the hospitality sector, specifically customs incentives. Candidates are advised to take keen interest in the incentives available to investors in that sector as provided in the East African Community Customs Management Act under Schedule 5. So those are the main subject areas where questions usually come from. But a question can come from anywhere in the syllabus. If there is something I have not touched on, but it is in the syllabus, you should not ignore it. So offenses, penalties, objections, and appeals are a subject of the Tax Procedures Code, but these are almost always examined as part of the computational questions. So you will not see a question on its own standing asking about objections and appeals. It will always be in conjunction with the computational questions. So if candidates have not revised these, they will not get the maximum marks. Another area, the tax incentives, they will also come in play, especially when the question requires tax planning. But candidates were not conversant with the various tax incentives under the various tax laws. Some incentives are under the income tax law, others are under the VAT law, others under the customs law. So all those incentives, the candidates need to get familiar with. For example, candidates struggled to present incentives available to a person carrying on commercial farming in Uganda. Tax incentives are key components of prudent tax administration, and the question tested the level of appreciation of the same. So candidates aspiring to become tax consultants ought to be keenly interested in this area, as it is key in tax advisory. So what are the exam preparation tips as I conclude? 1, obtain a copy of the tax laws that are being tested. The domestic tax laws, which include the Income Tax Act and the VAT Act. Also get the East African Community Customs Management Act and make sure to read them. There is also useful information on the URA portal, which you can browse and read. Someone was telling me that they don't know where this information is on the URA portal. When you go to the URA portal, please go to the link which is mentioning A to Z. You will find there lots of writings URA has done to clarify issues, to notify taxpayers of new things, notifying taxpayers of the taxation of the different sectors of the economy. So there is a lot of information that you can read in addition to the tax laws. But remember, with tax, the tax laws are like our Bible. It is the major, those are the major texts that we have. So even where you are undertaking self-study, ensure that you are reading materials that are up to date. So examiners will usually set amendments after a grace period of 6 months. But because of the nature of income tax being a historical tax, income tax amendments as per July 2021 to June 2022 are the ones likely to be tested in the period July to December 2022. This is just for emphasis, yeah? The exams in September and December will test amendments as per July 2021 as the 6-month grace period ended in December 2021. So obtain the relevant copies of the tax laws from the URA portal. And amendments to the tax laws commencing July 2022 will only be tested beginning January 2023. So right now, the amendments which were made this year from July 2022, if you are going to sit an exam in December 2021, you should not expect those ones to be featuring in that exam. So cover as much as possible of the whole syllabus. The examiners will examine all parts of the syllabus, so you can't afford to spot. And the examiners are not the teachers, they are not the lecturers, they have no idea what you have learned except what is in the syllabus. You also obtain copies of recommended reading material, although I would advise right now that you concentrate on the tax laws because tax changes and the reading material may have some of the items. The available reading material right now may have some of the items which may not be relevant. Thank you for listening to me, and I wish you good revision.
Yes, thank you very much, Charity. It has been really insightful. And when I look in the Q&A, we have a number of questions that would like you, that like members would like you to respond to. Okay, so we are going to start with Florence. Florence is asking for guidance on the channels of assessing the ever-rising tax law changes. I don't know whether that is clear to you.
Yes, it is clear. And I think I have given some guidance on it. Okay, as I was navigating the URA portal, I found out that they have updated their portal with the tax laws for the year, incorporating amendments from July 2021 to June 2022. So anyone who is preparing for these exams can get these laws on the URA portal right now and read. But even the changes, when you go to subjects, topics A to Z, it has the amendments that were made during the year. In fact, for all the years, you'll find URA has summarized them and they are available. I hope that is clear for her.
Yes, and I think that answers her question. Then this one is from someone anonymous. They're asking, are we supposed to answer tax questions as they are clearly stated in the Income Tax Act, word by word, or we can simply answer as we understand?
Anonymous, whether Mr. or Miss, I don't know. Please answer, please answer as you understand. Please answer as you understand. If you are able to quote the tax law the way it is, well and good. But please answer as you understand. It will solve a lot of problems, because if you try to quote and you quote the wrong thing, then you get marks. You will not get the marks. But if you understand something and you write it in your own words, then the examiner is also going to point out that this person understands what they are talking about, rather than trying to quote and then you end up quoting wrongly.
Yes, I'm sure members have understood that it's better you write what you understand rather than quoting what you may not be able to understand. This one is still from Florence. She's saying, kindly guide on the air tickets and relocation costs for both family and the employee.
I think I talked about it. If an expatriate is coming to work in Uganda for the first time and is coming with his family, the air tickets for the family members will be part of his total relocation costs into Uganda. But if the family members or him want to go for holiday and the company is providing them air tickets, yeah, to go for holiday or to go back home for leave or for something, those ones will form part of the employment income. The relocation costs will be only if the person is coming into the country and it is necessary that he comes with his family. So there, the relocation costs will include even for his family. But any further movements by the family members or him going for leave and coming back and what, all those will be part of his employment income. It is again when he's leaving the country for the last time after his assignment is done that those costs will not be part of his employment income. Is it clear now? I hope so.
I think it is clear, but there's where you mentioned where it's necessary for one's family to come with when they're getting employment, maybe in Uganda, and they're coming from another country. Could you clarify on how can a student tell that it is in this scenario, this is necessary that this person comes with their family? How can one tell?
It will be implied in the wording of the question.
Okay, thank you, Florence, for that question. I'm sure others that did not ask have clearly understood. Now, this one is from Pius Chizito. He's saying, kindly pardon me, on calculating motor vehicle benefit under employment income? Just briefly.
Oh,
I think we are going to combine it with this one. There's another one that is also about motor vehicle, where this person is asking which percentage do we use when depreciating the motor vehicle? Is it 30% or 35%? So I think let's combine Pius's and this one that is from an anonymous person. And you answer them at once.
yes, I think the question is coming from what I mentioned, that some candidates could not depreciate properly. You remember, some time back, if you got a vehicle as a new employee, as a benefit, the cost at which you have bought the vehicle would be the basis for the computation of your benefit until you leave that organization. And when the vehicle would move, or if the vehicle had moved to another person, it would be depreciated, and then the new person would get a new value that to use. But as long as it is one person who had the vehicle, that value would not change until the person leaves the organization. So there was an amendment like 2-3 years ago, I think, which provided that every year the vehicle, the value for computing the benefit will be depreciated. And that value will be depreciated at 35%. I think answering for the person who was asking for 30. Currently, it is still 35%. But basically, I think that rate should change because the type of vehicles have now moved from the class of 35%, and they are now in the class of 20%. All motor vehicles have moved to the class of 20%. So this particular question needed someone to compute the nominal depreciation value, and it had been held for some time. So from the time the vehicle was purchased and from the time the benefit was being calculated, there was a period of 2. I think the vehicle had been sold. I don't recall the specifics of that question. So there was a lag of 2 years. So people would depreciate for 1 year and then start computing the depreciation, and yet the vehicle had been in use for 2 years before the person could use the vehicle. I hope that clears the air.
Thank you, Charity. This one is from Emmanuel. NCA and Peace Village is in a partnership to manage donor funding of EU project in South Sudan. Maybe he's asking how do we treat the allowable deduction applied to the two organizations on rental cost of office? I don't know whether you understand that question. I understand it. I also don't. So maybe Emmanuel, you can retype the question very fast such that you get a response. We shall go to Pius. Why do we still use 35% to calculate car benefit for the preceding years, and yet it is now in class 3 while calculating capital allowances?
That is the law. The law has not changed. That is the law. So if it has not changed, then we cannot change it. I think those are some of the things that we may see in amendments coming in future when they are pointed out. But that is the law. When you are applying law, you read in nothing, you put in nothing, you just read it, and what it is what you apply. Right now, if you are to calculate car benefit right now, you have to use 35% because that is the law. Is it clear to Pius?
I'm sure Pius understands it clearly now. I think we can go to Helen. Good evening. How about the employment income and value added tax that was amended recently? In October, will it be examined? That was amended recently in October. Will it be examined?
In October?
Don't get it. Okay, maybe let's go with the recent amendments. Will it be examined?
I thought I
Let's
was
leave out
clear.
October.
I was clear. I said amendments that came into force on 1st July 2022, whether they are for income tax, who is interfering? Whether they are for income tax or VAT, they will not be examined for an exam which is going to be sat in December.
Excuse me, Charity. Let me tell CPA, just ask kindly mute.
Okay. He has muted. So they will not be examined in the exam that you are going to sit in December. But for some reason, if you are going to sit an exam next year, June or September or whatever, these amendments that were made from 1st July 2022 will be examined. Right?
I think you. Okay, thank you, Charity. I think the issue of amendments, I think you shouldn't tire from asking, because Maria is also asking a question, I think closely related to that. She's saying, can you kindly clarify on what rates to use in regards to the year set?
Which rates?
I think she's asking about amendments. This should be in line with amendments.
Talked about amendments.
And the year set in the examination, I think.
Yeah. So if you reach in the examination and the question is giving you year ended June 2022, then you expect that when you are dealing with capital allowances, you now have 3 classes instead of the 4 classes that we used to have before. And so you are expected to use the 3 classes rather than the 4 classes before. Luckily enough, our income tax rate's okay. Now maybe for rental, which has moved so fast, yeah? You find that the rental for individuals, the year ended July 2021, we had our rates which had withstood the test of time for a long time, where we are allowing 20% deduction, and then we are taking tax at 20%. So there was an amendment with effect from 1st July 2021 to 2022. And that amendment provided for allowing expenses up to 75%. So come the year starting July 2022 to June 2023, that one was repealed, and we now have 12% for individuals. So if you are sitting a question which has a year ended June 2022, and it is a rental tax question, you are expected to use 75% deduction, because that was what was prevailing for that year of income. If it is a year ending June 2021, then you have our rates which provided for expenses at 20%. You are even allowed expenses for mortgage, then tax was at 20%. That's what would be applied. And I'm sure if you downloaded a template from the URA portal for an individual who is doing rental tax, the moment you put in the year of income for which you want to calculate that tax, those are the rates that will come up. I hope it is clear now.
Yes, I think it's clear. And I think Maria is contented. This is from Carol. Please clarify on farm out concept in regard to oil and gas transactions. Hello, Charity. Is it my network? Charity? Charity, we've lost you. Allow me check on her. You know, network. Maybe she has dropped off because of network. Let me check on her. Remembers, let's wait for her to rejoin. She's trying to rejoin again. Yes, Charity, welcome back. Kindly confirm that you can hear me. Hello, Charity.
Hello, Claire. Claire, are you there?
Yes, I can hear you.
Are there issues to the secretariat, or it is only content related to charity? Because why I'm saying that, since the timeout of the Zoom link is up 7, it's likely to cut us off when it clocks 7, and we may have connectivity challenges. So we need to see what is there, and then we come to close. I'm worried we may get off.
Yes,
Hello?
just as I've heard your concerns, I think she's back.
I am back. I was off for some few minutes.
And members, we are sorry about that. I think let's just respond to these few questions. I think they are remaining like 3, and we'll call it a day. It's from Carol. Please clarify on farm out concept in regard to oil and gas transactions.
I don't know whether that is something I can clarify on now on this Zoom in this time, but she can frame her question like properly and send it to the institute, and I get something I can respond, which goes on the students' portal and they can read through.
Okay, I'm sure Kara has heard that. This is from Pius again. For rental income, is the 70% taken as expenses or the lesser of the 70%, 75%, sorry?
The law was not mentioning the lesser of, but URA in applying it, yeah, they were saying you have to justify your expenses. So if they are less than 75, then you take the expenses that you have. But the formulation of the law did not mention that. So, but going forward in the current amendment, of course, you cannot claim the companies which claim expenses, they cannot claim more than 50%. So it has gone down again.
And Pius has later on clarified, I think, on his questions. He says, I assume I have rental income and the expenses are less than 75%. Should I take the exact expense or still take 75%, e.g. rental income of 10 million and expenses are 3 million? Should I take the 7.5 million or 3 million and tax the balance at 30%?
You take 75%. He can try it out by getting a provisional return and he puts in his income. The return will take off 75%.
I'm sure Pius has understood. I think this one will be our last one from Arsenal Aaron. He's asking, is there a specific format of provided by the law on how students should present their workings, such as for taxation of companies and individual taxation? I think individual taxation.
The format is not provided by the law. No, you can do the way you want. But for good practice, a standard format was provided in the reading materials which the institute provides. So if you have the reading materials which the institute provides, the examiner will expect you to have your presentation in an orderly manner. But then again, when you look at for income tax, when you look at the income tax return, the schedule where the income tax is calculated. There is an orderly way in which items are added and in which items are deducted. So it is not a provision by the law, but it is an orderly way in which it can be presented. You don't mix them up. You add up one thing, then you deduct another thing, then you add up, then you deduct. It confuses. So it is better the candidate follows the recommended way that is provided in the reading materials. That's it.
Thank you so much, Charity. And I'm sure Pius is happy, as well as Arsenal and the rest of our members that have asked questions. They must be happy now and must be preparing to pass their next sitting. Otherwise, thank you so much, Charity, for answering all the questions, the queries. Thank you for the beautiful presentation. I've learned a lot. Thank you, members. You've been an active audience. Thank you so much. I would like to remind members that our next session there's a session of students engagement seminar of advanced financial reporting. In case there are members in this audience that are interested, it will be taking place on Friday, 11th November 2020. Kindly endeavor to attend, and if you know of any friends that are doing advanced financial reporting, encourage them to attend, because such sessions are very insightful and they can be very helpful for one to pass. Otherwise, thank you so much. I would like to call this session to a close. And have a good night.
Okay, good night to you too.